First up, let's now focus on Inox Wind because the company did manage to turn profitable in Q3. In fact, they also have a strong order book at around 2600 megawatt. We have the management joining us now. We have Devansh Jain, who's Executive Director of Inox GFL, who joins us to take some questions. Devansh, thanks a lot for joining us. And my first question is on the profitability. Is this something that we're going to see quarter after quarter? Because, I'm also noticing that your net debt has come down quite significantly. So just on the basis of, saving on that interest cost, do you think profitability is something that you'll be able to maintain?
No, thank you. Good afternoon. It's a pleasure to be on CNBC again. Yes, it has been a milestone quarter for us. We've turned around. But if you notice, our EBITDA was about close to 100 odd crores in this quarter. What's happening is obviously with the tailwinds in the sector and the ramp up which is taking place in the business, we expect that every quarter is only going to get better and better and better. Naturally, thanks to the significant fundraise which we've done over the past 6 months to strengthen the balance sheet and clean up the debt, interest costs have come down drastically and will continue to come down such that they become zero, hopefully over the next 3 to 6 months. And that further will add to our profitability as we move forward.
Okay, so interest cost will become zero hopefully in next 3 to 6 months. What I wanted to understand is your order book right now. What kind of revenue visibility do you have because of the order book in hand? And how much of it is coming from the private sector?
Look, our current order book is at about 2,600 megawatts. In fact, just recently we signed the largest ever wind deal in India. It's a 1,500 megawatt order from CESC. Typically, this order book would be valued at close to about 20,000 odd crores. This is something which we would ideally be executing over the next 18 to, I would say 24 months. Having said that, I think we're in advanced stages of significant further order inflows across PSUs, C&I, and IPP players. So I think we should see frankly, significantly stronger order book as we keep moving forward. Of course, this is one of the largest order books in the sector. In terms of the split up, I would say broadly about 30% of the order book would be with PSUs broadly, and the remaining 70% would be split across C&I and IPP players, which are the private sector players.
Okay, you got that, and I'm sure the street is going to like the sound of that. But I just want to get some more details on the order that you mentioned, the 1,500 megawatt order. This is with CESC. Just take us through what is the expected EBITDA per unit over here, and also what is the total project, that it will really work out with the total project amount, because I do believe this is spread over 3-4 years, right?
Look, so, typically when you sell a turnkey project, it's close to about 7.5 to 8 crores a megawatt. And the deal we've signed with them, 1,000 megawatts is turnkey and 500 megawatts is equipment supply. Of course, equipment supply is without the EPC part, so to that extent, the price is not included. But broadly speaking, this would, in terms of revenue, broadly, would be a deal which would be close to about, I would say 11,000 crores over the next 3 to 4 years. I won't get into specific margins, but what we've said is historically till 2017, when the sector was doing very well, before the painful transition kicked in, we typically used to maintain a 14 to 15% EBITDA run rate. And I think what we've said going forward from FY25 onwards, we expect to get back to similar levels and possibly enhance that as we keep moving forward with our O&M business becoming larger and larger.
Okay. In that case, we've been talking about this big push that is coming on renewable energy, be it solar, be it wind. Hydro is taking some time to pick up though. What do you think would be the risk here for the sector as a whole be, barring the order wins? Is it the raw material side? Is it the supply side issue? Because demand, as you're saying, continues to be very robust.
Look, I think whatever could go wrong in the sector for the past 5 or 6 years has already happened. The sector was in doldrums, and then COVID hit the world. I don't think anybody could think of COVID. How I would like to answer this question, or at least how I would like to answer it for Inox Wind, is we've looked at possibly all the risks of this business, and we've readied ourselves for the huge ramp up which is expected in the sector. So what do I mean by that? We've focused on 4 building blocks. Number one, we've got a very, very robust and strengthened balance sheet, which happened by way of capital infusion from the promoters, as well as some of the fundraise which we did last year. We hold a strong, the promoters hold a fairly significant stake of this company. So we're not down to 10, 12%, unlike some of our competitors. Second, we focused on technology, right? So we've recently got our 3.3 megawatt product approved by RLMM, we're empaneled by the government. And now we see a significant ramp up in supplies of that and a lot of interest from investors and investors in the sector who need to buy turbines. Yeah. The third thing we did was we've looked at project site development capability. And I think that's a very strong move for us, where we've got a very, very robust, high value project development pipeline. We probably have across OEMs the largest plug and play infrastructure available. And I think that's the single biggest risk for the sector, because people don't have the ability to execute wind projects. So solar is much easier, if I may say. And wind is complex. And I think we've got all these building blocks in place to, to kind of ride the wave which wind is going to see.
Absolutely, and the wind is blowing with 130% gains in your stock itself in last 1 year. So thank you so much for joining us today and giving us the outlook going forward, especially for the company and the sector as a whole.